The near precipitous drop in oil prices has been caused by two things: fears about a global recession induced by one of the biggest unknowns in recent years, the spread of the coronavirus, and the oil price war brought about by what many say is the needless standoff between two of the world's biggest oil producers, OPEC, the swing producer Saudi Arabia, and Russia, one of the world's biggest non-OPEC producers. Who's going to blink first? And what's it all mean for the much lauded Saudi Vision 2030? The forward-looking document that Saudi leaders have planned to take the country into the future and diversify it away from oil. Gaurav Sharma joins us now. He's an independent oil commentator. Gaurav, good to talk to you. What has led us to this point?
You see, the Saudis were trying to reach out to the Russians well before OPEC convened on the 5th and the 6th of March in Vienna, and they were asking for a drastic cut. Both parties eventually got together along with the rest of OPEC, and as these things go, OPEC meets first, and then they meet the so-called Russian-led OPEC plus the following day. So on the 5th of March, all of OPEC met and in one voice told the Russians that they'd like a deepening of their already existing cuts by 1.5 million barrels per day. The Russians turned up next day and said a very firm yes, a no, which completely shocked the market. If the listeners of the broadcast would recollect, on that particular Thursday and the Friday, it was Brent was in free fall. Now, essentially, what happened was that we had a 10% or so correction, intraday correction, on Friday the 6th. That very weekend, my trading sources tell that the Saudis went back and pretty much emailed every trading source of theirs from Singapore to Houston, telling them that they'll offer different grades of discount. In Asia, the lucrative market of Asia, they offered somewhere around up to $6. In the States, it was around $7 a barrel. But here, this is the interesting bit. In northwestern Europe, where sometimes Russian crude heads to, they offered as much as a discount of $8.50. There was really nowhere else for Brent and West Texas to go the next day, but to correct and to factor in the discounts. And that is precisely what happens. But then the market got a double whammy. The whole coronavirus thing started taking hold in OECD markets, primarily in a number of European countries, especially Italy. And then there were lockdowns, shutdowns, airlines announcing 75% cuts to flight patterns, President Trump saying most of overseas travelers are off limits for the United States, US-Canadian border closing. It was a bit of a storm. And all these things coming together, crude has fallen to the extent that neither Moscow nor Riyadh expected.
Yeah, so we're down now below 26, or have been in the last day or so, below $26 a barrel. What is the effect of this sort of price of Brent, as we're talking about there, on Saudi and also on Russia? Because we're hearing that both have national balance sheets that need oil prices higher than where they are.
So there you go. I think the Saudis have a lot more firepower in terms of petrodollars. The Russian fund is worth about $150 billion. Sounds like a lot, but God knows how long it'll last. They say that they can even tolerate $8 per barrel oil prices. Jeremy, I find that very hard to believe that Moscow can stomach $8 oil prices. Now, the ammunition that they use here is that they'll tax their companies in ruble, which of course is falling against the dollar. And these companies earn their revenues in US dollars. So that's the kind of stimulus that Russia provides its own oil producers. But for that, the Russians need a level to work with. Right now, we don't have a level. It was 33, then 30, then 25, nearly threatened to go below 20. Now we're sort of, West Texas is somewhere above 20. And as you mentioned, Brent is just south of 26. And all these guys, OPEC and Russia, were supposed to meet on the 18th of March, Wednesday the 18th of March, and it never really materialized. But I have a feeling that diplomatic channels are working overtime behind the scenes. My gut instinct is this falls to 20 or below, or late teens, or $20 a barrel, using Brent as a benchmark. People will come back to the negotiating table or coronavirus webcams, as seems to be all the race these days, fairly swiftly.
Of course, I think back at the beginning of February, I think you'd written an article, I believe, in Forbes, hadn't you, where you were talking about something sub 30. So you're now calling sub 20 for Brent.
if this continues. My sub 30 analysis was predicated on something which a lot of people were not factoring in. They were saying that OPEC plus camaraderie would sort of last the distance in such trying times. But I always feared that there's always been historically there's been a lot of suspicion between Riyadh and Moscow, and my reasoning was that if OPEC plus collapses, we will see sub $30 prices. Now, what we have here is that has happened, and sub 30 prices did happen. What has now happened is shutdowns on an international scale, including closer to home here in the city of London, with services being reduced. Now, with that, coupled with OPEC plus not being able to get its act together, I think sub 20 is a very realistic possibility. In fact, we could get there fairly soon. The issue here is that, in my opinion, OPEC plus has failed spectacularly.
Yeah.
Saudis have left other members to carry the can often in the past because they can manage. And I think this is a repeat of. I think this is pretty much the end of OPEC plus as we know it.
Right.
But if this hits below 20 fairly swiftly, let's see what happens.
Very quickly, U.S. shale, is that over now? I think the Americans were pumping something like was it 12 million a day or something?
See, I see a correction of about 1 million barrels per day in U.S. output for 2020, 2021. But to make a sweeping assumption that shale is finished would be a very harsh call, because a number of shale players who have acreages, who bought silly acreages for silly money, they will definitely go under. I think they're finished. But there are a number of shale players with very viable acreages who can keep going at about $25 to $30. And let's not forget the big boys, the likes of Chevron, BP, etc., have also stepped into the shale play. So to prematurely predict the death of shale is a bit silly.
Yeah.
There'll be a correction about 1 to 1.5 million barrels per day in American output, but American light sweet crude will keep hitting Asian markets and European markets.
Yeah. Just talking about the way things are developing, you've already said that you don't see much future for OPEC plus, which of course is the relationship between OPEC and non-OPEC nations. What about OPEC itself? Isn't OPEC now in jeopardy?
I would say so, because this is, but I attach caveat. This has happened in the past, that the Saudis have sort of gone out and pumped too much just to teach the others a lesson. At least that's how we can the metaphorical equivalent of the market. They've again gone out, and this time what they're attempting to do is not just pull one over some of the naughty boys within OPEC who flout their quotas, but this time it's a direct engagement with Moscow and saying, you know what, do your best. We are ready too.
Yeah. Look, Gaurav, we've got to leave it there, but thanks for joining us. It's been a pleasure indeed for us. Gaurav Sharma is an independent oil commentator.